Good morning, traders. Hope you're doing well today. It is Wednesday, the 30th of August, 2017. Tomorrow's the last day of the month. It's 8:09 a.m. Chicago time, 9:09 a.m. New York time. There have been some delays. I'm experiencing some issues here, some technical issues with the broadcast, and it took a while to get started here today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance as we sit here um, is just slightly off. The indices are slightly off. Looks like the DAX is making a recovery. The DAX had, not sure how many people know this, but the DAX had hit a 200-day, got below a 200, dipped below a 200-day moving average on the cash index yesterday. Hadn't seen that for a while. So the DAX and the Euro stocks are up higher. The euro is down, and that's pretty much why they're higher, or the bulk of the reason why they're higher. The euro poked through $1.20 yesterday, first time in 2 years, and the dollar is continuing to be weak. The dollar's has been getting hit pretty good. We see also that gold is making a small pullback here at 1313.30, down $5.70 or 0.42%. Crude continues to be a lag to be weak, trading at 45.98. Yesterday had some really good swings in crude, uh, uh, down and up. It dipped down to 45.76 and finished the day at about 46.37 from a high of 46.91. So it dropped $1.20 from the high, came back from the low to finish 60 cents higher. And so this is um, this is where we stand right now. As far as what's out there that's likely to drive the markets today, we still continue to see the effects of the um, storm in Houston, Hurricane Harvey, as pipelines are disrupted. RBOB is strong. The refinery capacity in Houston has been deprecated, and so there's an excess supply of oil that is not being refined. Therefore, you see oil dropping and RBOB increasing. I've seen quite a few traders who are trading that spread and getting crushed because they're short RBOB and long crude, looking for those to converge back to normal. And since this storm is we're still in the middle of the storm, the spread continues to expand and they're losing on both legs. So be careful there. The other big thing that's looming is North Korea. The world's still looking for what steps the U.S. and its partners are going to take to curb the action in North Korea. North Korea says that the missile they launched yesterday that caused the markets to drop or gap down was a test run to hit Guam, which is a U.S. territory. So it's a direct threat to the U.S., and we're looking for how it's going to respond. In addition, we have looming ahead of us, we have the fiscal year ending for the U.S. Federal government, and we have a standoff potentially between the president and Congress with the raising of the debt limit, and so that's likely to weigh on the Treasury markets as well. GDP came out this morning. GDP came out this morning. Annualized came in at 3%. Versus 2.7 expected. Personal consumption came in at 3.3 versus 3.0. So the growth annualized is higher than expected there. So that's pretty much the background. Here's what we expected yesterday, what we talked about yesterday. The market was expected to rise from the open, was looking for a consolidation, an open auction on the open, but I was looking for pushes up, and the market was expected to push into this 43 area. That was hypo 1. What makes hypo 1 different than hypo 2, which looks very similar, is that hypo 2 does not take a dip. It is initiative, or it's responsive, and it's driving from the get-go. Hypo 2 ended up being the play yesterday. Again, hypo 1, hypo 2 looked the same. Hypo 1 was looking for a base and a move up, and hypo 2 was looking for a move up from the open. Hypo 3, and both had targets 24.43. Hypo 3 was an attempt higher that fails, and then it rotates over and starts to test lower, looking for a dip below 24.21 before it recovers. So we saw what took place yesterday. Here's what we got. We got a small push down, and then the market immediately started to trend up, and we ended up pushing a lot farther than expected. The areas that I outlined yesterday in yesterday's Trader Bite, 24.35 and a half was a key area to test, and I tweeted about it, saying that it's likely to get stuck here. I tweeted somewhere in here, and we were stuck here for about an hour before the market continued, and then I was looking for 24.43 as a target. You can see it hitting it there and consolidating in this area before continuing up on the close. Yesterday, the trade was basically just as expected. I know many did not expect a rally yesterday, but this is the difference between looking at the market in terms of indicators versus looking at the auction naked. And this is it doesn't always do as we anticipate the auction to do, because there are a lot of inputs, and it's becoming more and more complex as far as what the market movement is based on. But if you start to look at the market from the perspective of what the auction is likely to do and what we're moving away from, given that remember, the core yesterday of the argument was we moved down on news. Looks like I'm missing data again, but there's a drop in here. Let me see if I can quickly download it here. Let's grab 10 days of tick data. The market dropped a week and a half ago, and then it recovered, and it was stuck for 5 days or so in a balance zone that we dropped beneath, and we were dropping beneath it because of news, and because we were in balance, and because the only thing that is pushing us out of the way is news. It's not earnings, it's not some economic figure that's repricing the market. Then the auction expectation is responsive, uh, and therefore we expect the market to pull right back to the scene of the crime, or the SOC, which was 24.4375 from the prior day's close. That's where we ended the prior day's auction, and we came back to it. Okay, so here's the data now that it's been loaded. So you can see that here, and again, the reason I was expecting and looking for a responsive buying spree yesterday is because we have been in balance for these 5 days, and then we opened below it on news. We have a nice base beneath us. Remember, I talked about this. We have a nice base beneath us that we're likely to test. That's why hypo 1 was looking for an open dip and then push up. And then we're looking for the market to come back into line. Has anything happened? Has this news really affected the valuation of the S&P 500? No, it has not. So we're looking to trade from the long side, and I showed you yesterday how I'm using S5 Bookmap to look at areas to lean against to get that long on, and to ride it back to 24.43. So that's the lay of the land. Now, what have we done? We've rallied all the way back up. We did not take out Monday's high. We did not take out Monday's high. We basically came back in line and brought our point of control back in line with the MC point of control, the bigger picture point of control. And nope, this is not what I wanted. Hang on. So this is a composite. Here we go. All right. So we came back in line. You could see this from this overnight chart. So this is a 24-hour chart splitting the Globex session, which is the dark blue on gray profile with the dark blue outline, from the light blue with gray profile, which is the day session. So the prior night session, you could see again the argument for a rally on the open is the consolidation on the overnight. Lots and lots and lots of base put down by the prior Globex session uh, to set us up for the rally. And what the market has done is it has opened, traded sideways, uh, pushed higher right before the European Open, and has been trading down since. So what am I expecting? Can anybody guess what the main expectation is given the overnight, where we are in the day session and what we've done overnight? Yes, the expectation is for more balance today on Wednesday. The expectation is that the market is likely to stay in a holding pattern, given where we are. Again, we pushed to 24.54 and a quarter, and we have come back into 24.45 and back into the 5-day balance we've had all along. So what have we accomplished? Not much. We've basically tested below on that news, and we are right back into the 5-day balance. Okay, so that's how things are. And if we're back into the 5-day balance, there's no outside influence as of yet. Again, we're still waiting for what the world's reaction is going to be to North Korea. That might reprice things. We're also looking at this risk with Hurricane Harvey, but the market's pretty much holding steady, not expecting too much to happen, and so we see more of the same. So what are we expecting today? We're expecting an open auction, looking for the market to push higher, take a poke through 48.50, and then I'm looking for the market to retrade this area here, push back down to 24.35.50 and climb back up. That's the primary hypothesis for today. So I'm looking, how do you trade that? Great. You're guessing at what the market is likely to do, but how do you actually make money off of this? What traders kind of miss is, yes, these are the expected moves on this particular plan. This is kind of how the battlefield is expected to play out. The action on this is once it pushes through this 48.50, if it does push higher, if it becomes initiative out of here and pushes higher, what's the quality of the movement? If it's finding resistance on the way up, then you hit it. You hit the bid, you look to get short, or at least I hit the bid, look to get short, and then my target becomes this low volume node, which is the prior day's low. So now I'm back trading, aiming for 24.43, the MC point of control, and then the low volume node, which is at 24.39, 38. And then I'm looking for a continuation and a base at 35. So this is going down to 35.50, the bigger picture MC point of control before the bounce into the close. That's where this comes from. Okay, I'm simply sharing with you how to come up with your own plans, which is the whole purpose of this broadcast. The market opens here in a minute. So the secondary hypothesis, again, we're opening in line with the balance zone that we've been in. We're opening in value, basically. The expectation is if it does not push higher and it starts to sell off and take back some of what the market has done yesterday, I'm looking for it to dip through that LVN at 38, base again, and look for a rotation up, through, and back. So I'm expecting a profile today in either case, whether it drops early or goes higher early, which is hypo 1. I'm looking for a profile that is fairly balanced. By the end of the day. That's hypo 2 for you. I'm not expecting a trend up. Trend up is hypo 3. We have tested below, so we've dipped below. There's an argument for a run up. We've dipped below and found buyers, and so there's an argument under hypo 3 that once we've tested below and we have this initiative buying or responsive buying back into the range, then the next most likely test is higher. And so you have hypo 3, which is looking to push back into the upper balance that we've had through the month of July. So that is hypo 3. Okay, and that is likely to have a lot of energy. Why? Because we've been imbalanced. There's a lot of volume that went in to this 6-day balance now. So there are quite a few people who are likely to get pushed out of trades, out of their shorts, and so they're feeding into the long run. Okay, does that make sense to you all? I hope it does. That's how the three plans are come up, and then now it's all about execution, which is covered in depth in webinar 5 on my website, and in other areas using Bookmap as the execution and order flow tool. I suggest you look at that if you were looking for detail. If not, just keep watching and you'll start to pick this up over time. It takes sticking with it to actually get it. Good luck.